Following Federal Reserve Chair Jerome Powell's surprisingly dovish tone at Jackson Hole, August 24, 2025, Ethereum exploded higher, briefly touching a new record of about $4,957 on Binance. Powell noted that policy was already restrictive and hinted that rate cuts could come as soon as next month. That shifted market sentiment sharply. In the immediate aftermath, CoinDesk reported Ether gaining nearly 10% in 24 hours, reaching record highs above $4,800 and trading around $4,700 by contrast. Bitcoin's post-speech gains were more modest. Bitcoin spiked toward $117,500 on Friday, but quickly retraced, settling in the low $110,000 range around $112-115K by midweek. In other words, while both major crypto assets rallied on the Fed pivot, Ethereum clearly outperformed, capturing the spotlight with its bullish momentum. This divergence reflects a capital rotation narrative that traders are talking about. Institutional and whale investors appear to be shifting some funds from Bitcoin into Ethereum. On-chain analytics support this. Data from blockchain intelligence firms Arkham and LookinChain showed that long-dormant Bitcoin wallets have been converting BTC into ETH. For example, LookinChain flagged one veteran OG whale moving roughly 6,000 BTC, about $689 million, into Ether, buying a total of approximately 278,490 ETH at an average price of $4,585 worth $1.28 billion, and still holding 135,265 ETH long. Another dormant whale reportedly sent Bitcoin proceeds into hyperliquid swapping BTC for Ether there. In short, these are signs of money flowing out of Bitcoin and into Ethereum and other altcoins, which could be part of a broader all-season rotation. Several analysts note that Ethereum's fundamentals like strong staking yields and upcoming ETF flows are attracting demand. So the rising tide may lift ETH more than BTC right now? That said, Bitcoin itself isn't dead. It has strong on-chain support and ETF interest. But this week's price action shows Ethereum enjoying more upside momentum. As one trader put it, given the current market structure, commentators remained focused on ETH as a result. Meaning Ethereum's rally has grabbed headlines while Bitcoin's gains have tapered off. Technically, Ethereum is now on the cusp of a major breakout. Popular chart analyst BitBull pointed out that ETH is attempting a strong weekly close above $4,600. This is important because no weekly candle has ever closed above that level before. If ETH holds above $4,600 on the weekly timeframe, BitBull argues it would confirm that the move isn't a bull trap. In fact, he warned exactly that scenario. If successful, the weekly close will be an important confirmation that this is not a bull trap. And it would pave the way for the next upward phase, with a target price reaching $5,200, $5,500 next week. In line with this, the Coing last CT Markets report cited BitBull, saying a close above $4,600 would set the stage for $5,200, $5,500 by the following week. Those targets are very much in play right now if the weekly candle holds above $4,600. Meanwhile, market data confirms heavy demand at these levels. Institutional desks report more demand for ETH than for BTC, and credit desks note whales accumulating Ether aggressively. BitBull himself noted that despite ETH's roughly 300% rally over the past 4 months, whales aren't slowing down. This means large holders are still buying in bulk, which is unusual late in a parabolic rally, and suggests confidence in further gains. Indeed, the analytics firm A-Invest summarized that $2 billion of BTC is being rotated into Ethereum, with whales accumulating 278,490 ETH, $1.28 billion so far. Analysts like Miles Deutscher from Deutsche Digital argue that strong corporate and institutional interest in ETH is a key factor. Over $20 billion of commitments for Ethereum treasuries are waiting to be deployed. All of this points to structural capital flow into Ethereum right now. On the future side charts, both assets have notable CME gaps to monitor. For Bitcoin, the rally left an unfilled Chicago Mercantile Exchange CME futures gap around $116,910 roughly, $115,000, $117,000 range. Crypto influencer Crypto Rover marked that gap on X Twitter, and analysts expect BTC to revisit it soon. Trader Dan Crypto Trades reminded followers that such weekend CME gaps tend to fill quickly. We have closed pretty much all of them. On Monday, meaning Bitcoin is likely to dip back toward that zone shortly. In fact, the CME chart shows Bitcoin futures closed Friday around $117,430 and will open Monday below, leaving an open gap to $116,910 if history holds. BTC could retrace toward $116K, 117K early this week, potentially filling that gap on the CME chart. Ethereum had its own CME gap earlier, a weekly gap between $4,092 and $4,261. That opened in July after ETH's summer rally. On August 22nd, analyst Rect Capital noted that Ethereum had successfully filled its weekly CME gap green and reversed to the upside from it. In practice, ETH has recently settled back above that zone after briefly dipping toward it effectively, covering the gap. In other words, the $4,092, $4,261 region has been filled and now acts as strong support. This means if ETH pulls back, that old gap range should cushion the decline. Indeed, ETH is currently consolidating well above $4,250, the top of the gap. As long as that support holds, it validates the breakout. Looking at the weekly charts, Ethereum's trend is bullish. ETH has broken above the long-term downtrend line that had capped it and is now retesting its recent breakout. Levels around $4,000, $4,300. Cointelegraph's market analysis noted that ETH just cleared the upper trend line of a multi-year symmetrical triangle in the $4,000, $4,200 zone. A technical move that projects a measured move toward $8,000, more conservatively. A Wyckoff-style count yields a target near $6,000 if the current breakout sustains. Importantly, that analysis also emphasizes the last point of support LPs phase after a breakout. Traders expect a quick pullback to confirm support before the next leg up, and it looks like ETH is doing exactly that by retesting around $4,100, $4,300. TradingView chartists have pointed out that the $4,000, $4,100 zone, former resistance, is now acting as support. In short, the chart story is ETH smashed through its old ceiling, filled the CME gap beneath it, and is holding above key support. If weekly momentum remains strong, see BitBull's weekly close criterion, the path to new highs is clear. That said, risks and caveats abound. The strongest technical scenario can still fail, and history warns that a sharp rally into August can be followed by a pullback in September. Analysts at iInvest explicitly note the September correction pattern. Virtually every bullish ETH summer has been followed by some profit-taking in early fall due to seasonal cycles. As their report puts it, Ethereum's 2025 rally is no exception, while structural factors provide a strong floor. Seasonal patterns could still trigger a correction in September. Indeed, Cointelegraph recently pointed out that historical cycles often see an early Sep dip after an August rally. If such a September effect materializes, ETH could give back some gains this month, even as longer-term fundamentals stay bullish. Another near-term risk is purely technical. If Ethereum fails to sustain above $4,600 on the weekly close, some traders fear that could turn the rally into a bull trap. BitBull himself cautioned that without a weekly close above 4.6K, this move might lose credibility. A failure there could trigger stopouts and a quick pullback, undoing much of the August advance. Furthermore, we can't ignore broader macro risks. The Fed may have sounded dovish, but any hint of U.S. economic resilience or unexpected inflation could reverse that narrative. As CoinDesk reminds us, even a Fed pivot carries uncertainty. There are risks from an overheated equity market and potential macro or geopolitical shocks lurking. A surprise outlier in jobs or inflation data could stoke fears and send crypto prices reeling. Lastly, after such a torrid run, the market could simply be exhausted. Sentiment and positioning are very bullish right now, which means downside moves can be sharp if even a small catalyst hits. In Bitcoin, for example, hidden divergences are already flashing, and ETH likely has its own overextension signals, though not as obvious yet. We should watch trading volumes and order book balance closely if we see a sudden stall or cluster of liquidations. That could signal short-term exhaustion. In sum, the charts and data are painting a bullish picture for Ethereum. A clear close above $4,600 would open the door to a push toward $5,200, $5,500 next week, as several analysts have noted. Sustained flows into ETH, especially via ETFs and treasuries and technical breakouts, support that scenario. But investors should remain cautious. Historical cycles suggest a pullback in September is possible, and the premium prices imply vulnerability. 2. Profit-taking or macro reversals. The all-season rotation of capital from Bitcoin to Ethereum is underway, with whales loading up on ETH. But that same rotation could reverse if market conditions change. For now, traders will be closely watching Friday's weekly close, the behavior around $4,600, and any news over the coming days. As one analyst summarized, we're now fully expecting rate cuts to happen in September. This is significant, and many more will come, which could keep crypto momentum alive. If that scenario plays out, Ethereum could indeed break above $5,000 and test the upper targets. If not, we may see ETH pull back to the $4,200, $4,300 range or even lower before resuming any uptrend. In this environment, it pays to hedge. Traders might scale in and use tight stops, keeping an eye on both the bullish targets and the warning signs. The next week could decide whether Ethereum's rally continues to $5,500 or pauses for a breather.